Welcome everyone. This is lesson 8 of our SMC strategy in the XP Academy. And today we'll continue for what we started in lesson 7, which is liquidity. This liquidity concept is kind of complex, as I've said earlier, because there's liquidity everywhere. There are orders everywhere. Liquidity in this SMC strategy simply means orders, where we have orders, stop orders most especially. And that is what we want to use to fuel our entry and also fuel our exits, because are the two important things, your entry and your exit. If you get your entry right and your exit is not correct, you will still give away all the loss, all the profits you've made again. It's the end of a sale. So your entries, your exits, that's where you get out of the trade. It's as important as your entry. Okay. So continue with liquidity. All right. So last week, sorry, in the last class, we established that we have different type of liquidity. We have equal lows, equal highs. Okay. We have equal lows, equal highs, or double bottom, double top, anyhow you want to call it. Equal lows or double bottom. It's the same thing anyhow you want to call it. And we also have equal highs or double top. This is very small. Let me increase it a bit. Yeah, I think it's better like this. Okay. So I said that when you have a trend, a market moving uptrend this manner, okay, like we have this, you know that this is where you have your new higher high, your higher high broken and a new higher high created, and that's where your demand zone started from. Okay, so you can bring your box. This whole zone is your order block, right? But this zone is too wide. You don't want to just enter trade from here, okay? Because if eventually, because at long run, price cannot keep going up. At long run, it will still come back and invalidate. It will still come back and invalidate this place. It cannot just keep rotating it forever. At some point, it's going to invalidate it and give us a change of character. Okay, so you wouldn't know when that is going to happen. Okay, so if you are entering a long right from here, and at the end of the day, you went to invalidate these points, then your area of loss will be, your loss will be very, very wide, because you enter at this high price and get out at this very low price. Okay, so that's why we are trying to make it become smaller. Okay, we are trying to make that zone become smaller, and that's the concept of us having POIs. And we say our POI can either be order blocks, right? It can be order blocks. It can be weeks. It can be buy to sell weeks if you're on a downtrend, and sell to buy week if you're on a uptrend. Please stop drawing on the charts on the screen. Please stop drawing on the screen. Somebody just drew this G now. Please clear it. Okay. All right. So since I don't know how to stop participants from drawing on this one, just help me and stop drawing on this one. Thank you. All right. So we have we can now minimize this area of demand to make it a smaller one by looking for order block between these points and this point. Either order block, buy to sell weeks, sell to buy weeks. Okay, these are the things we look for. All right. Now, liquidity is what will now help us fuel our entry. For example, price having an inner structure like this, okay, going back down for a retracement, and we created a stuff like that. You understand? In its way of coming back, you know, I told you this should be an internal structure, because price is fractal, have structure inside structure. Okay, these are big overall structure, right? But in the process of it coming back, it will also be creating another structure. Okay, so now in the process of creating that structure, it can give us a kind of liquidity pool. You can create a kind of liquidity pool. For example, if you look at this is a double bottom with neckline broken right here, right? So some people will see that as a trade opportunity. Okay, some people will see that as a trade opportunity and they want to enter long and put their SL below here. Okay, they will see this as double top, double bottom, and they will see neckline broken upward. Okay, so they will see this as an opportunity for their long, something like this. They want to long at the break of that neckline and put their stop loss just below the double bottom. Okay, I get this high. All right. Now, this their stop loss is what we want to use to enter into our own trade, because by the time the price starts to go against them and hit their SL, that SL will push price down into our entry. Okay, and price can move up. Now, price moving up, we have full of liquidity above here also. Okay, because there will be some breakout traders I explained last week who that trade breakouts, so they will see this as breakout and they want to trade it. Okay, so that will also serve as our exit liquidity. Hope that is clear. So instead of we will put our own entry just at our order block below the liquidity pool where there are stop loss. Okay, where we think there will be stop losses. Okay, and who also target the exit liquidity. So the people that took this trade, this particular one, okay, are going to lose their money, and that money they lost, we are taking it. That's how it is. Liquidity is just money. So the money they lost is the one we are taking, and we are going for a profit. Exactly. Does that make sense? Does that make sense? Or should I go over it again? Because people said they did not understand it very clearly. Someone said I should come back, I should come again. I think we will get it as we continue, okay? We will get it as we continue. Because I don't think I don't, you will get it. Let's just proceed, okay? Now, this is equal lows. We also have for equal highs, okay? Let's say we have equal highs will be on downtrend. Price is moving down in this manner, okay? Price is moving down, okay, in this manner. And we have this lower low broken here. We have lower low broken here, right? We have lower low broken at this point. So that makes this whole area our supply zone. Okay. We don't expect price to go above here. If price should go above here, then we have a change of character. Okay. So when price begins to retrace for a pullback, it will also form complex structure. Okay. We form complex structure, something like this, moving back down. All right, decide to go down. Then it forms something like this. Then it forms something like this. Okay, so let's say we have an order block just below that. Let's say we have an order block. Let's say we have an order block around this zone. Okay, so we expect that some people that trade from double top, that they will see this as an entry opportunity because it broke this neckline and there's clear double top here. So their entry will just be somewhere around here, right? And their stop loss will be here. Okay, so this their stop loss is the liquidity we are looking for. Okay, because liquidity is money. That's where they are losing their money, and that's what we are interested in, and that's what will uh, trigger our order. Because immediately their stop loss, its price will move down, move up a little bit more, because yeah, because of their the stop losses here. Okay? So we'll just place our own entry shows above it, so that by the time they are losing their money, we are taking it. That's liquidity graph. Okay. So for our exit target here, our exit target here, we are out of the trade. So they are going to lose, and we are going to beat you, and they are losing too. That's just how the liquidity works. And this concept is for the concept of using equal lows and equal highs. There are other forms of liquidity, but this we use equal lows and equal highs. So this place is our equal highs now. Okay, you can call it equal highs, you can call it, but me, I enjoy putting dollar sign there, just to tell myself that the money I'm looking for, that's where it's sitting. Okay, so I'll put the dollar sign there. Okay, that's how I used to do mine. And where I'm taking the exit, I'll put X. Okay, that's how I love to do it, but you don't have to do it that way. You can do it anyhow you want. Okay, so we have the dollars that we are looking for right here. We tap into it, price down. Okay, so this record structure right up here, we will have that trade. So that's how this is just the schematic for using equal lows, equal highs. I hope this is clear now. Now, apart from using equal highs and equal lows, I think we should just do all the theory now. We'll use next class for pure illustrations. Okay, charts. So this is the concept of equal highs and equal lows. And we have another one. We have trend line liquidity. We have trend line liquidity. Okay, it's very easy. Let's say we have a price moving up like this. Okay, let me first prepare your mind about it. Okay, you know, normal trend line trading, once you see this two bottom like this, you join them together, right? And if price come back to that trend line, you want to enter a long. Okay, so you want to enter a long around here, right? So you want to enter a long around here. That's what we put trading trend lines, right? Still started this rubbish again. Okay, so may want to put their SL a little bit below. Okay, we will also be targeting this high. So that's how the trend line will work. If you want to trade this trend line, this kind of thing you want to trade, right? This is the kind of thing you want to trade. All right, so that means there's always stop losses just below trend lines. Some people may decide to put their stop loss below this low here. Okay, so some may put their own here. So there are always stop losses below trend lines. So that's what we call trend line stability. And how can we use it in our SMC strategy? It's very easy, just the way we did here. Okay, or can have something like this. You can have something like this. Let's do for an option first. We have option in market like that. Okay, then price started moving down in this manner. Okay, price starts moving down in this manner. Okay, so something's not right. Okay, just a moment, please. Yeah, then we have something like this. Okay, this is what we need. Okay, this is how it looks like. we have something like this, and we have an order block around here, for example. Okay, so this is clearly a trend line that we have here. Okay, this is clearly a trend line we have here. All right. So below these trend lines, we expect a lot of stop losses to be there. But this will be the last point. Nobody that's trading trend line will have a stop loss below more than here. It will be the last stop loss. Some will put theirs here, some put theirs here, some put theirs here. So we have all those liquidity pool, all this place as liquidity pool. All this area, we have stop losses there. So that's what stop loss we are targeting. If you have other block below it, then we expect price to clear all those liquidity, tap into our order block, push up. So this right here is trend line liquidity. Okay. Remember, you must have a bit of structure here first, right? So all this trend line liquidity, price will come, we follow it. Then tap into our order block. So targets this higher high here to exit. This is trend line liquidity. Okay, this is trend line liquidity for buy. That's for buy. You can also have it for sell. You can also have it for sell. For a sell, you can have something like this. Okay, so wow. So we have all these trend lines here. Below this trend line, there's what? There's liquidity. And let's assume we have a kind of order block just below all those liquidity. Then we expect price to come down, sweep all of them, tap into our entry. Okay, targeting this point for our profits. So this is the liquidity we target for entry, and we target this one for exits. This is for a sell scenario. Okay, does that make sense? Any questions with that? No one is saying anything. Time it's not time frame dependent. It's when you are generating your your own personal trading system, you can decide to use 30 minutes and find entry on okay. I think I get the question you're trying to ask. Everything can happen on the same time frame. Internet structure does not have to be lower time frame and higher time frame. Sometimes even on the higher time frame, you will still see the internal structure. Let's say this is a typical example now. All this move can still be on the same time frame. So this is also a market structure, but it's happening within this bigger one, with this push up. So this reversal is the one giving us internal structure. I don't know if you get it clearly. Let me see if I can see that on the charts. It doesn't have to be on another time frame per se. Okay, it doesn't really have to be on another time frame. Let's say we have something like this. Okay, as one push. Okay, to break the structure. If you look at this move up, you see that we are still having some higher highs, higher lows, higher high, higher lows. In between, still the same time frame. So all this move now is internal structure. But if you go down to like 15 minutes time frame, you will see it clearer. The higher lows, higher highs will form clearer. But even on this time frame, you see that you are seeing those move. Okay. Then we have a small reversal like this. Inside that reversal, if you still see that it's still another structure in it, but you may not see it very clearly here. But if you go to lower time frame, you see it more clear. Okay, then it push up again. Okay, with this push-up, if you look at, you will see that we have higher highs, higher lows, higher highs, higher lows, higher highs, higher low, higher high. Then it broke this higher low a bit, like a kind of fake out. Push up again, higher lows, higher highs, inside out one single move. Okay, so that is internal structure. That is internal structure. Okay, you don't really have to use multiple time frame. Yes, this place now is swing low and this is swing high. Okay, so in between them you have structures, and those are internal structure. You don't really have to go to that lower time frame to mark out internal structure. You can still see them on that same time frame, but it may not be very clear enough. Okay, you understand? All right, so that was it. For the equal lows and highs to be used as liquidity, must it break trend line? Mm, if you break the trend line, you are more confident, but most of the time it may not break it. Okay, so you don't really have to wait for it to break. Once you see a form of W sign, if you see price, just make a form of W, something like that. You can just trade the inner for push up. Okay, that's not the only thing you use, right? You still have to have other confluences, break of structure, imbalances, and all. Okay, but if neckline is broken like this, then it's more stronger. I hope that's clear. Did I answer your question at Wapsman? So let's proceed. This class is already running out because we have just 30 minutes. So the next one we'll talk about after this. The next one is buy side liquidity, sell side liquidity, all those kind of things. Those ones are very, very easy. Okay. It's just when you have price move like this. Okay. Then you have the price come down a bit, then started move, and even if you break structure, it can still break this high. Some may not break it, some may reach somewhere here, and we have other block that I failed to tap in. We have an order block that move failed to tap. You remember that this move did not take any liquidity at all. It was just coming down and in reverse. Okay, sometimes it may have like an order block below it here. Okay, so since this did not actually take any liquidity, this price moving down did not take any liquidity before reversing. Okay, and it created an order block. Automatically some people want to trade that order block. Some people want to put their entry here like this and have their stop loss there. Okay, and trade the order block. All right, so this order block may serve as a liquidity. Okay, though it broke structure, we have a break of structure. This is not actually a break of structure, this is just liquidity sweep. You will see price come back down, take this low now as the liquidity to tap into this one before you move up. Price does this a lot. Okay, this like some people call it is it buy side now, buy side liquidity BSL, and the opposite of it, some people call it. So sometimes it may not break that high, that just move up like this. Okay, but the bottom line is the reversal happens above an order block. It reversed above an order block, and it did not actually tap into anything. Okay, and it did not do it. It did not sweep any liquidity. It just reversed like that and was going up. So this low can be now used as liquidity pool because some people have their stop losses below it. That's a little bit complicated, but with time you get it. So that's another form of liquidity right here. Okay. to just tap into our POI and push up. So we also have that for sell. We also have that for sell, something like this. Sorry, sometimes these charts can be messy and stressful to control. Let me just go to another side. Okay, let me use this place. We have price going down, book structure. Then we have this little push, okay, and came up. But we have an order block here that was filled that price did not actually get into. So this low, especially if there's an order block at this point, it's more juicy because we expect price to now come sweep it, tap into our own entry. This is another possibility of liquidity. Okay, this is clear, right? Remember, this move down. Number one, did not tap into any other block. And number two, did not sweep any liquidity before move up, before you push up. Okay, sorry, before you push down, and that will make it the liquidity the next time price is coming down. Price will tap. Some people will see this as a change of character. Okay, some people will see that as a change of character, and they will just fall for a trap. Okay, that's this one should be SSL now, sell side liquidity. That will be SSL now, sell side liquidity. Okay, is this concept clear? Oh boy, it's like people are not really understanding these things. People are just leaving the video, the live stream. Maybe it's their network anyways. But we still follow up to this moment. All right, so that's another form of liquidity we have in the market. Like we now have one more, okay? We have one more, and that one is peak order block. Order block can also be liquidity. Let's say we have price moving in this manner, okay? So we have an order block right below here, okay? And we have another block, and we have another order block right above here, okay? Now, the thing is, this order block at the top can serve as liquidity for the one below. This order block at the top right here can now serve as liquidity for the one below. So that when price move down, clear down, tap into the one below. This is also a form of liquidity, okay? Because people's stop losses are below this order block, and that will fuel price into this, okay? So we're already getting to the end of this class. Now, there's something called mitigation. There's something called mitigation. And there's something called inducements. Okay, so these two words are where we'll be starting our next class from. Okay, they are very easy. I've already explained them, but I'll just be showing it to you that this is what mitigation is. This is what inducement is. That will round up our class for today. Okay, let me give you a quick recap in 1 minute. Okay, we have spoken about different kind of liquidity we have in markets. We said we have equal high, which is double bottom, double equal low, sorry, which is double bottom, equal high, which is double top. So equal low is this. It happens in an uptrend. The internal structure creates an equal low above an order block. Okay, the price come and wipe the liquidity tap into this other block. Then on the flip side of it, we have equal highs. This internal liquidity creates a double top. Then some people enter shorts with their stop loss above it. Their stop loss is what will trigger our own order and push to our targets. Okay. So we also have trend line liquidity where people trade just trend lines, putting their stop loss below it. That means below every trend line, we have a lot of liquidity, that's stop losses. And this is an example for uptrend markets. We have this uptrend, and we have a bunch of liquidity below it. That's SLs. Also, one price to come, strip it off and tap into the other block. Okay, so this is also for a downtrend. You have this trend line here, a lot of liquidity approach. It's price move up, play it. Okay, so we have also pick other block where we have another block above another other block. So this other block at the top can serve as liquidity for this one below. Okay, so this buy side liquidity right here. Then we have this low above other block. This low did not tap into anything. Came break structure or fail to break structure, price can come down, play stop losses below it, tap into entry. Okay. Then we also have it for downtrend right here. Okay. Also have it for a downtrend when we have this price tap into use this low here as liquidity to tap into the other block. Take this down. All right. In nutshell, okay, let me just explain one of these words now. In nutshell, all this we have been seeing this morning is inducements. Okay, it's inducements. Now, when we call something induce, that means you are trying to entice somebody to do something. Okay, you are enticing them, even though if it will not favor them, you are trying to entice them, make it do it, make them do it, even though if it's not logical. Okay, so we are trying to make people enter this inducement is trying to make people enter the trade at a price that is not comfortable for them. It's not favorable for them, so that they can eat a sale and tap into our entry. We'll talk more about it. Thank you very much for your time. If you have any question, I will leave the last 1 minute to take them. Then I will call it class. See you next one. Any question? I will assume someone is typing. Just give it a few minutes. 1 minute. Just one. If nobody drops any question, then we'll end the live stream. Somebody already asked any question. I've answered all those questions. The last question is for DT or DB. Liquidity must it break neckline? I've already answered that. All right. I think there's no question at all. So I'll send all this schematic. I'll cut them and send to the group chat. Okay. I'll send it to the group chat. So your work to do now is to open your chat. Open your chat and find this on your chat. Find them on your chat. You see any of this liquidity, you can screenshot it and send to the group chat so that people can learn from that. So, all right. Thank you very much once again. Do have a wonderful weekend. See you in the next class.